I'm not a doom and gloom person, believe me, but I'm a realist. And I'm very much into protecting people and protecting their assets and protecting hard-earned money, because it's hard to come by, and I don't like to see it just going off. And somehow, in some ways, I feel some Kiwis feel as though New Zealand is isolated from the rest of the world. That we're somehow not connected with what goes on in America and what goes on in the rest of the world. I speak with clients all over the world, particularly in America, for financial advice, and I'm really seeing them suffering. Particularly in California. California is bankrupt. Michigan is all but bankrupt. I have a client in Michigan, her house a year ago, $1 million. Now she's got it on the market at $250,000, and she can't find a buyer. So, to me, when I see this going on in other parts of the world, I'm hopeful that it's not coming here, but I have to say we're all connected. Our economy, how can we believe that our economy is not intertwined with everybody else's in the world? Look at our banks. Our banks are Australian-owned, except for Kiwi Bank and Taranaki Savings and South Building Society. That's about it here, isn't it? And how stable are they? Manufacturing is declining, people are getting laid off. And this national government, since it's come in, it's going to do more cutbacks. It's already started. We can see. But look at education, look at health, look at social security. Let's start with education. They've already cut the funding to adult and community education. I've been fighting for that vigorously, because it's only 16 million, which is a small amount of money, compared to the 9 million they just spent on the referendum for a smacking bill. Don't want to say. But isn't it short-sighted of a government to cut the very funding that people need to train in new skills for the job market, for people to get jobs? So by cutting that very funding, I think we're going to see a whole lot more needless, unnecessary unemployment in this country because of that. If we look at the health cuts that they're making, aside from the obvious that we're going to see a lot more sick people around, I also think that we're going to see people leaving the health industry because they're not going to be able to afford to live on the salaries that they're receiving. Social security. There's a lot of corruption in the system. I mean, for people to be able to claim almost $1,000 a week in benefits, without going out to work or whatever it takes. So there's corruption, and my concern is with these cutbacks, is that the people who really need the money at the time when things are really severely cut are not going to get it. And they may well end up out on the streets, and we may well see more homelessness than we've ever seen before. So if we're seeing all this, what chance do the elderly have in this country? With the cutbacks in health, with the cutbacks in social security, with the cutbacks in pensions, it takes a whole lot to survive in this country moving forward. I see clients who've invested their savings in the likes of ING, in the likes of these Bridgecore, Blue Chip, all these various companies who've either had their funds frozen, can't access your money, or they're accepting a paltry 60 cents on the dollar, or they've lost it all in a finance company. And I'm seeing that day in, day out. So what on earth can you do with your money, with your assets, to protect yourself? And today that's what I'm going to talk to you a little bit about. I'm going to give you some hints and some tips, because there isn't much. I'll be honest with you, there are some options, but because the economy is so volatile, And so changeable, it's hard. It's hard to know exactly what to do. And what's right for one person is not right for somebody else. So these options that I'm giving you today may be great, one may really work for you, and one may really be inappropriate. So each person has to be assessed individually. So I'm asked very often, shall I buy property? Shall I buy land? Particularly now, as you're getting such a little return on your savings in the bank. If you're lucky, what are you getting? 2, 3, 4%, something silly. 3%. Wow. Yeah? We're not going to get too excited about that. Especially as interest rates were much higher not long ago. So if you had some savings, at least you could have an income from those savings. Now what do? So I'm asked about property. Here's my view about property. If you want to buy property or land, there'll be 3 caveats I would give you. First one is, you need to find an amazing, amazing deal. That's the first thing. And when I mean amazing, I mean that if the average property is 200,000 in that area, if you could buy something for 100,000 or even 125, okay, you've probably got quite a good deal. That's number one. Number 2 is, you need to buy it in cash. This is not a time to leverage. This is not a time to be taking out debt. What if you can't let that property? What if it stands empty for a year or more? And you've got a mortgage to pay? And wait, property taxes are going to go up. You've got taxes to pay. So the last thing you want to do is to take on a debt on a property. So I'm advising strongly against that. The third thing is, so you've found your wonderful deal, you've bought in cash, and then you need to remember that you may have to hold on to it for 10 years or more. There's the thing. Because nobody quite knows when or if this market is going to pick up again. And remember, property is an illiquid asset. You can't suddenly just sell it and get your money out. It may take time to sell. So those are the issues with property. Banks. Savings. Banks. What you do. We don't have much choice in this country, do we? We don't have lots of different banks. So I would say, first of all, spread your money around the banks. Don't put everything in one place. That's the first thing. None of us know quite how vulnerable the banks are, and yes, the government has stepped in with the guarantee scheme, but none of us know. We live in a very uncertain environment now. None of us know whether the government will honour that comes the day. So, I see a lot of people tying themselves in, again, for 3 years, 5 years, on these term accounts to get an extra, maybe 1 or 2% interest on a term account. Okay? The issue with that is, very often you don't get your interest until the end. Till the end of the term is when they pay you your interest. So in the meantime, your money's just sitting there. You're not actually making an income from it. The other thing to remember, and again, maybe because I've had some experience with the American banking system, is that when a bank goes down, I know fortunately we haven't seen that in New Zealand, but I have seen it. When a bank goes down, the people who've tied themselves into any kind of investment within that bank are the later ones to be paid out. The ones who've got their money on call, not tied into any kinds of agreements, get their money more quickly. Your money is more easily accessible. So sometimes the extra risk for 1% or 2%. I know people who invested in Bridgecore, for example, they could have got 8% in the bank, and they got 9% with Bridgecore, and they lost it all for 1%. Not worth it.